A lot of people are bracing for the potential impact that tariffs could have on your daily, weekly grocery bill.
Something is happening in America's grocery aisles that no one saw coming. For years, Kroger stood as one of the country's most stable and resilient supermarket chains, quietly embedded in everyday life. But now that same giant is pulling out, quietly but decisively. 60 stores will close across the United States over the next 18 months.
Surprising news today. Kroger announcing it is closing 60 stores over the course of 18 months.
No massive collapse, no overnight bankruptcy, just slow and steady retreat. And the explanation being offered is not failure, it is strategy. Kroger's announcement arrived without drama. It was buried in an earnings report. No major press event, no list of locations, just a line item and a quote. The interim chief executive officer said these stores are not delivering the sustainable results they need. The company took a $100 million impairment charge. They called the benefit modest, and then they moved on. But the communities losing their only grocery store are not moving on. YouTube is not the biggest fan of content like this, but we believe people deserve to hear the truth. If you agree, hit that like button and subscribe. It helps us beat the algorithm and keep going. We really appreciate the support. Kroger has confirmed that every affected worker will be offered another job at a nearby location. But that promise lands differently in places like Abingdon, Virginia, or Kingsport, Tennessee, where the next closest Kroger might be over an hour away. It lands differently in the suburbs of Chicago, where 3 Mariano's stores are shutting down. It lands differently in parts of Texas, Georgia, and Kentucky, where a series of closures has already begun and where replacements are not coming. It lands differently in neighborhoods where that one store is not just where people shop, it is where they meet, where they rely on weekly promotions, and where they see stability in a volatile economy. And that economy is growing more volatile by the week. As of today, over 11 states are already confirmed to be losing stores. Virginia is being hit the hardest so far. 5 stores are being closed across the state. In West Virginia, the Gasaway location will close permanently on August 22nd.
A grocery store in Braxton County will soon be closing its doors. According to a spokesperson, Kroger, located in the 2900 block of State Street in Gasaway, will be closing August 22nd.
In Tennessee, the Kingsport store will shut down by mid-September. Other closures are already underway or scheduled in Maryland, North Carolina, Illinois, Indiana, Wisconsin, Georgia, and Texas. More are expected to be confirmed in the weeks ahead. This is not an economic collapse. It is something more subtle and in some ways more dangerous. It is a reshaping of the food access map in the United States. Kroger's store closures represent only 2% of its total footprint, about 5% of its flagship stores. But the consequences are not evenly distributed. In large cities, there are options. But in rural and low-income neighborhoods, losing a supermarket is not an inconvenience. It is a shockwave. Some of these communities are already designated food deserts. The United Food and Commercial Workers Union has called the decision reckless. Local petitions have been launched. Town halls are erupting, but the closures are moving forward. Kroger says these stores are underperforming, and in pure financial terms they may be, but the financial picture is not bleak. Kroger's first quarter results beat expectations. Operating profit held steady. Net sales came in just slightly below the previous year, $45.1 billion compared to $45.3 billion. Shareholders liked what they heard. Kroger's stock price surged nearly 10% on the day the closures were announced. Wall Street is applauding the move. So what is really happening? What we are watching is the grocery industry responding to pressure on all sides. Food inflation remains a constant. As of May, grocery prices were still up 0.3% from the previous month. Compared to pre-pandemic levels in 2019, food-at-home prices are up nearly 29%. Consumers are changing how they shop. They are trading down. They are skipping non-essentials. They are stretching every dollar. At the same time, labor costs have risen. Grocers across the country are facing wage hikes, tighter labor markets, and increased union activity. Kroger is one of the largest private employers in America, with over 400,000 workers. That workforce is now more expensive to retain and retrain. And then there is the invisible pressure, competition. Walmart, Amazon, dollar stores, regional discounters. Everyone is fighting for the same shrinking consumer wallet. And looming behind all of it is the newest threat, tariffs. The United States is now less than 1 week away from the possible reimposition of sweeping new import tariffs. If ongoing negotiations fail, July 9th will mark the return of the most aggressive trade duties the country has seen in a generation.
President Trump says he's sticking with his July the 9th trade deal deadline while renewing his threat then to cut off talks and slap duties on various nations, including Japan.
a baseline tariff of 10% on all imports, with country-specific penalties going as high as 25 or even 50%. Food, packaging materials, equipment, and general merchandise are all in the crosshairs, and the grocery sector will not be spared. Kroger has not publicly linked its store closures to the upcoming tariffs, but analysts across the industry are already warning that if these duties snap back into effect, grocery costs will rise. Imported fruits, vegetables, seafood, dairy, canned goods, everything becomes more expensive. Retailers will face higher transportation costs, higher packaging costs, higher shelf costs, and higher insurance premiums for international shipments. The Federal Reserve is watching. Chairman Jerome Powell has said it is too early to predict the precise inflationary impact. But internal surveys from the central bank already suggest businesses are planning to raise prices. Some companies are even accelerating imports now, buying and shipping early to get ahead of the July deadline. That is not normal behavior. That is fear-based inventory. And fear is starting to take shape in strategy. Kroger may be shedding underperforming stores not just to boost profit, but to insulate itself. The closures could be a way to trim exposure to regions where shipping costs, labor volatility, and inventory waste pose a higher risk in the event of a trade shock. If tariffs increase, grocers with leaner networks may be better positioned to adjust. With fewer stores, they can redirect stock. They can reroute logistics. They can reprice more aggressively. They can respond faster. But communities cannot. For the families that live near a store slated to close, there is no strategy to absorb that loss. There is only distance, and higher gas prices, and longer wait times. For the employees being offered relocation, the new job may be 50 miles away. That is not a solution. That is an exit. The store closures also come in the shadow of a failed merger. Kroger had spent 2 years planning a $25 billion merger with Albertsons. Together, the two companies would have formed a supermarket superchain. But federal regulators blocked the deal earlier this year, citing concerns over market consolidation. The merger is now dead. Lawsuits are underway. Both sides are claiming damages, and Kroger is back on its own. That context matters, because without the merger, Kroger cannot count on scale to boost margins. It must squeeze efficiency from within. And closing stores is one way to do that, not a desperate move, a calculated one. Prune the branches, reinforce the trunk. But that pruning comes at a cost. In some of the neighborhoods losing stores, the Kroger was the last unionized grocery chain in town. Its departure leaves only discount chains with lower wages and fewer benefits. In others, the store was the only one within walking distance. Its loss creates a transportation barrier, and in others still, it was part of the local economy, providing tax revenue, employment, and commercial foot traffic that sustained nearby businesses. This is not unique to Kroger, but because of its size, the ripple effects are bigger. And they are arriving at a moment when the entire grocery sector is entering a new phase. A phase defined not by growth, but by realignment, where success is not measured by expansion, but by adaptability. 30 new Kroger stores are still on the way. The company is not retreating entirely, but it is shifting. Shifting toward urban centers, toward high-margin markets, toward digital expansion, toward a future where the store is not just a building, but a data node. Meanwhile, the rest of the country watches and waits. For many, this news may feel distant, another business story, another chain adjusting. But for those who live near one of the 60 stores, it is immediate. It is felt in the empty shelves, in the silence of the parking lot, in the absence of familiar faces behind the checkout counter. The United States is entering a period of economic transition, not a downturn, but a reshaping. And that reshaping will not arrive with fanfare. It will arrive through closures, through consolidations, through changes in what is available, where it is sold, and who has access to it. Kroger's move is one piece of a much larger story. A story about how global policies, national decisions, and corporate strategies intersect in the most local of places, your neighborhood grocery store. Let us know what you think in the comments.